And today's session is on GST audit, and we will discuss about the landmark judgments in GST in the year 2025. To share the insights on this topic, we have CA Sandeep Jaiswal ji, the partner of Deloitte from Mumbai, and CA Rahul Baldi ji, Associate Director from Deloitte.
While we have mentioned 2025, but I do not want to go as back as the safari retreat judgment, etc., because I know that a lot of us have already discussed about it, contemplated, and and debated on that. So we'll not cover that. We'll cover the recent ones only. What I have tried to do is to ensure that how do we bring it closer to the developments in GST 2.0, because when we're talking about GST 2.0, the primary theme has been, one is the simplification of tax regime, and second is that how do we ensure that ease of doing business through easier compliances. So these judgments, if you'll note that mostly they are trying, at least the courts are trying to ensure that how easy, how easy and how easier we navigate through the GST processes and compliances. So mostly they have been pro assessee judgments, which is a good news actually, right? Because when we're talking about GST simplification, and while we are already into the ninth year of GST, obviously, a lot of things, have been simplified, and the idea is to make it more simpler. Now, this is the first topic, and second are, my colleague Rahul will speak on GST audit, and how do we navigate through the GST audit processes, how do we deal with tax officers, what are the various nuances around it, mostly in that front. So the way we'll do is, I'll cover the first thing, the judgments, and then I'll take question answers on, on the first part, on the judgments, and then we'll move to the GST audit part. So let's get going. The first judgment. Now, this one is very critical, because now this was a unique judgment, given by Sikkim High Court. Earlier, it was given by the single member bench, and then it went to the division bench, and division bench looked into the matter. Now, when we're talking about GST refund claims, generally there are only two ways of getting GST refund. One is if you're only zero rating your services, and the moment you zero rate your services or goods, that is when you are able to get a GST refund on your inputs, or you claim a rebate of the the taxes. That is one way. The second way is when you are falling under inverted duty structure. Now, these are the only two methods of getting a GST refund. So that is why, when a lot of us were trying to get a GST refund other than these two reasons, for example, when an entity is accumulating ITC, just because, whether the output and the input rates were same and they were not able to use it, and when they were trying to claim a refund, there was no option. Even when we moved from service tax regime to GST regime, a lot of the entities had accumulated Senvat credit at that point of time, and they wanted to utilize a refund of ITC under GST. That is again when they were not able to claim it. Now, here was a case where suddenly, Sikkim High Court highlighted another way of claiming refund. They mentioned that if an SSE is closing its business, and if they had accumulated ITC, they can avail a refund of the ITC. Now, this was very, very unique. In fact, a lot of us thought that, how does this match with the GST provisions? Because this was something where, at least it was not in the law. And if the High Court has thought about it and thought that, that there should be some ease of doing business, or there should be some way that, that an assessee is benefited, let them provide the benefit. So there was a lot of hue and cry after this, because even we were kind of, astounded by the judgment, and when we felt that, okay, here is a way that if you have accumulated ITC, you can close your business and claim refund. So this thing went on for 3 to 4 months time, and I think there was a lot of ambiguity around this, even though there was a High Court judgment. Uh, but then finally, things fell in sense when the division bench of the High Court on the same assessee, SICPA India Private Limited, they decided that what the judgment rendered by the single member bench is incorrect, and ideally you should not be allowed a refund of the ITC on closure of business. So I think larger sense has prevailed in this, because uh, there was no third way of claiming a refund, and I think it is falling in place. But the important part here is that this also opens a Pandora box for the future, that why should there be only two ways of claiming a refund of ITC? Why not, wherein, because see, ultimately, when I am not able to use those ITC and the business is getting closed, then ideally, whether, the benefit should be given to the assessees. So this is one thing which is open, but I think it will take a larger time. It is not going to come in the near future. But again, this judgment has opened eyes for a lot of people, that that there can be other avenues of claiming refund. Now, this was the first judgment, and I think I'll move to the second one now. Again, a very practical judgment, and what we have ensured today is that we take only the practical judgments, and not the theoretical ones. Now, this is a case where we are talking about rectifying returns. So this is a case of Everday Technologies Private Limited, and this is a case where the question has been that how can we rectify return beyond prescribed timelines. So let me give an example on this. So in this case, the GSTR 1 and GSTR 3B returns, were filed within the prescribed time by the assessee. But then later on, they realized that that there are some arithmetical errors, and we all know that in GST it is very difficult to rectify a return. GSTR 1 we can amend, but still even now GSTR 3B cannot be revised. We all know that during excise, during the pre-indirect tax regime, while we are filing the excise returns, the service tax returns, the VAT returns, all had provisions of filing a revised return. But in GST we do not have a provision of filing a revised return. So here is a case where the assessee went to the High Court, and I'm very sure that only an amendment would not have helped the assessee in this case. So that is why they had to knock the doors of the Supreme Court. Once they went to the High Court, they went to the Supreme Court, and then Supreme Court mentioned that ideally, just because of a technical glitch, there should not be a case that wherein the assessee should not be able to file a revised return. So they should be allowed, and they should be able to do it. So this is a good and a welcome case, because like the way I mentioned that GST 2.0, and I'll keep linking GST 2.0 because this is very, very relevant, and we are in the third month of a GST 2.0 implementation, and still there is a lot of work in progress, and people are also talking about GST 3.0 at some point of time. So when we're talking about GST 2.0, again, the clear messaging has been that how do we simplify compliances, and also I am very sure that we are aware that there are processes on refunds, returns, etc., which has been undertaken on GST 2.0. So this one again, judgment by Supreme Court, and they have allowed a rectification of return, which kind of leads us to the fact that in future, ideally, GSTR 3B should be allowed to be revised as well, like the way we are doing in the pre-indirect tax regime. And that should help us, in making proper compliances. So again, this is a welcome move. And I'll just connect one more thing. You know, uh, People talk about GST and 2.0 these days. So when, for example, even when we are meeting the ministry and the GST council members, etc., the messaging which is coming out very clearly is that how do we ensure that we move from GST and 1.0 to GST and 2.0 similar to the way we moved from GST 1.0 to GST 2.0. Now, when I say GST and 2.0, what we are trying to highlight is how do we ensure, for example, that returns are automated because everyone is filing, e-invoices these days. Why is it that not that, that we are able to get everything in GST 3B from e-invoices itself and get the returns, finalized? Why is it that GST 9 and 9C are still required to be populated, and a lot of items needs to be populated? Why not we can ensure at least other than the financial figures, everything comes here? So this is where I think is very critical, and this Supreme Court judgment on rectification of return has opened lot of avenues. Earlier we had lot of cases from High Court on this matter. So I'm very sure that all of you would have definitely read about these kind of cases from the high courts. But Supreme Court, upholding the High Court decision and holding that, that this should be allowed, this is again a very, very welcome move. Moving on. Now, this one is RT Infotech case, and this is from the Allahabad High Court. Now, this is also very interesting. And again, lot of us are, grappling with these issues, currently. So, so here is a case again where, we as a recipient of supply of either goods or services, we have paid the invoices to the vendor. The entire amount is paid. That is paid along with GST. Everything is done. The vendor was properly registered. There was a GST registration, which was undertaken by the vendor. So everything was done in proper compliance as per the law. But one fine day, the vendors just disappear, or they are not present, or their registration has been cancelled. So that is when, I think, mostly what is happening is that, the recipient is not able to avail the ITC. Now, in this case, Allahabad High Court, again, this is a welcome case wherein it has been mentioned that, where the supplier, or where the vendor has failed to deposit tax with the government, the recipient should not bear the consequences of the same. And ideally, they should be allowed to avail the ITC on the same. I have one more judgment on this, which will come later, but again, that is on different facts, but that is again re-emphasizing the fact which I am saying, and that is a judgment by Supreme Court. So that will come maybe after a couple of cases, but that is also very, very relevant. So here again, I think what is important is to note is that while the law still says that ultimately the tax has to be deposited with the government, but here is a case where the high courts are taking a stand beyond the law, and they are agreeing to the fact that what is pragmatic is ideally what should be done, because ultimately as a recipient of a service I do not have any gateway, right, to ultimately know that how do we know that the vendor is actually paying taxes to the government or not, because that is not in our control and not in our part as well. So that is why ideally it should be allowed. So that is where I think it is also very, very relevant, and practically in future when we're talking about GST 2.0 and even GST and 2.0, hopefully in the near future, these all processes should help us. In fact, while my colleague will speak on IMS also later, it is also very relevant that I should bring that also here in picture, because the way IMS, the invoice management system, is getting developed, the government is getting a lot of comfort in the entire process of claiming ITC, because here is a process where there's an automation. You are able to check from the system that a proper credit has been passed on and the recipient has taken it properly and ultimately is able to use it. So that is where I think the government is keen that ideally these provisions of failure of paying tax with the government, the owners should not pass on to the recipient of the service. And which is where I think lot of circulars on for example the post supply discount and in fact allowing provisional refund. All those actually is leading to the fact that that there is an ease of doing business for the corporates, for everyone, and that is why it is very, very relevant. So this is again very, very important, and I think this is going towards bringing smoother transition and smoother compliances. I'll take the questions at one go. I'll just maybe quickly go to the next slide. All right. Now, okay, so this one again, this is helping the SSE, because in this case, surprisingly, what happened is uh, the assessee, raw and metal and alloys, they did not have any balance in the electronic credit ledger. And still the officer went ahead and blocked their ITC. So how do they do it? Because there was zero balance. So what the officer did was they created a negative blocking. So they created a block to the amount which was due, and the ECL became a negative balance. So this is where I think, Bombay High Court, the SSE went to the Bombay High Court, and the Bombay High Court chipped in and mentioned that this is something which is not allowed to be done. Ideally, there should be some balance to block your ITC in the ECL. And even when we're talking about Rule 86A, it talks about only blocking of ITC where there's a positive balance. So I'm sure that some of you also would be facing this music, with some of our clients, or at our corporate level, or at the organization where we are in. And that is where I think we need to take help of Rule 86A, and also of some of the judgments which are coming up on this. Moving on. Okay, so very, very practical judgment, and not many of us are aware of this, but this judgment I'll explain with an example, and that is where I think it will help a lot of us in understanding the nitty-gritty around this. So this is a case of Arvind Fashions Limited, and this is by Punjab and Haryana High Court. Now, generally, so let me give the example. So when we get an order, let's say from the commissioner level, which is an adjudication order, and next stage is obviously we go to the commissioner appeals. But we feel that the order has factual errors or some mistakes which can allow us to file a rectification. So generally, what we do is, because we know that there's a time limit to file, and go to the commissioner appeals, and that we have to do within the stipulated timeline. What we do is that when we file a rectification application, we are in a lot of hurry, because we feel that that entire process of filing a rectification, getting a hearing done from the commissioner for the rectification, and also getting an order, everything should happen in the next 2 months. In the next 2 months, filing the commissioner appeals, because that is when the deadline comes. So, generally what we do is that, generally the period gets over and we are unable to get that fulfilled, and in a rush, we go to and also file an appeal to the commissioner appeals while the rectification is in abeyance. So in fact, at least in my case, a lot of in the recent last 6 months, we have done, we have ensured that, at least we go ahead and file appeal to the commissioner appeals, because the timeline will go away. Now, this judgment, Punjab and Haryana court says that while the rectification process is undergoing, and while the entire process which I mentioned, right, for filing a rectification, getting a hearing done, and getting the order as well, while this is undergoing, the entire period of this processes will not be counted while filing appeal to the commissioner appeals. So this is a welcome thing, because now at least we can ensure that let the rectification process gets over, and then we can go ahead and file appeal to the commissioner appeals. I am hoping a change in law comes very soon on this, because in various other forums also people have asked me that, whether this is part of law as of now. The answer is no, but I think, very soon we'll have GST Council meeting also, somewhere in February, and that is where I think this should be taken up. So this can be part of, the union budget amendments, and ideally that should be the case. So welcome one, because these are all, practical, importance, which is coming out, from these judgments. And right now also I think, we can take help of this case law, because this is on the practical side, and ideally this should be, considered while, we're going ahead with both rectification and appeal, simultaneously. Okay, the next one. Now there has been judgments on this, but what we have noted, at least, with lot of cases, we are not applying this practically. So this is a judgment of RA and company, and very important is, in this case, is that, the show cause notice, which was issued, it was a single show cause notice, but it was covering multiple years. And multiple years, when I say, basically it's not like, 2 years falling under Section 73 and nothing else. It was a case which was easily falling within 3 years and also beyond 3 years, within 5 years. So that way it was kind of, covering both Section 73 and Section 74 period. So this is important to note that, even Section 73 and Section 74 mentions that ideally you should have a single year show cause notice. And this is very practical also, right? Because what even the Madras High Court in this case mentioned is that, see, it is not practical. So in the garb of issuing, one SCN with multiple years, what the officers have ensured is, in this case, is that they are getting away, with say applying Section 74. So when they're applying Section 74, they're covering all the 5 years, etc. While, it could have been a case of only 73, and the remaining 2 years may not have been covered. So that is where I think, the moment you mix it, so many years, then it is also very difficult for the assessees to justify that, that for some period there was no, fraud, misrepresentation, etc., and for some period it was, because now you're fighting this case on a bulk period basis and not on a year basis. So that is where again it is very practical, and I think if we are filing replies, on these matters, and I'm very sure, almost, 60 to 70% of the SCNs are like this only. So our first rebuttal has to be that, that this is not done, and you cannot issue a multiple year SCN. So that, and I think that can be challenged. Okay, the next one. Very, very important again. Now this was a case of amalgamation merger, and ITC balance was supposed to be moved from one company to another company. Now in this case, the first company, company A, balance was lying in Maharashtra, and company B was located in Goa, and balance was supposed to be transferred from Maharashtra to Goa. Now all the processes were undertaken, ITC 02 was filed, and processes all were undertaken. But the Goa state authorities, the GST authorities, they highlighted to the fact that, there is, no way that, that IGST, CGST, and SGST of Maharashtra can be transferred to Goa. They also highlighted the technical glitch. While this was not the main reason, the reason was that, interstate transfer is not allowed, but they also highlighted about the technical glitch. To this, I think the High Court, chipped in, and they mentioned that nowhere in the law it is mentioned that, you cannot transfer ITC, from one state to another state. In fact, even SGST of Maharashtra to SGST of Goa, that is also not, mentioned to be not allowed in any law. So in this case, ultimately what happened is the CGST and IGST of Maharashtra was allowed to be transferred to Goa. But sadly enough, the SSC themselves, they said that, that they are giving up on SGST transfer of Maharashtra to Goa. Now it would have been very, very interesting had they not given up this, this requirement, because ultimately, if this was the case, wherein they would have, challenged even SGST of Maharashtra to SGST of Goa, there's nowhere in the law this, which disallows transfer of the SGST credit. So, but in this case, it was given up by the SSC itself. So it would be very interesting to note in future, if somebody challenges also, under ITC 02 transfer of SGST from one state to another state, what is the reaction of the court going to be? So we'll have to just wait and watch on that also. Okay, moving on. Now, this is mostly, for us to know as a general knowledge that, what is going around. And this is very, very peculiar, because one gentleman, Mr. Pradeep Goyal, he has the inquisitiveness of knowing how OIDAR services are being tracked and complied with in the country. So he went to the Supreme Court, and so I'll just give a background maybe, before I get into the judgment. So OIDAR basically is I'm talking about online information database access or retrieval services. Now these services, they were also part of service tax regime. It is also part of GST regime. Now generally, in a very, very, broadly in a nutshell, so when a non-resident company is providing B2C services to an Indian customer, and if they're providing services in relation to an online information database, for example, ebooks or any online data or any or online music, for example. So anything in that nature. So when the foreign company is providing services to a consumer, an Indian consumer, the non-residents should comply with GST. They should pay GST while they're sitting outside of the country. They should ensure either through a representation or through themselves they can comply with GST law and pay taxes to the government. Now, see, I think first thing which will come under, and in our mind as well, that, how do we ensure that this is done? Because, right, if the non-resident is located outside India, how do we track? How does the government track? It's very difficult, right? So there are various processes which we identified. I'm not getting into the details of it. But overall, it has been very difficult to track a non-resident who is able to do OIDAR compliances. So coming to this case, this gentleman, I think he went to the Supreme Court and he's asked the Supreme Court, can Supreme Court do anything about, ensuring these compliances are done properly? Can we introduce a new return form? Can we ensure that there's a mechanism to track the total receipts? Can an implementation be done? How can a disclosure of data be done, etc.? So these were the specific requests, sought by the Supreme Court. So the Supreme Court heard this matter, very carefully, and they mentioned that ideally, yes, there should be a process laid down because ultimately the Indian government is losing a lot of taxes on this, so that should be laid down. And rightly so, they mentioned that the GST Council should look upon this. So one more agenda for the GST Council, when they're meeting next, is on OIDAR services. So a lot of changes, a lot of things are happening, and a lot of things are on the plate of GST Council, and this is also one of them which is forthcoming. So very, very interesting and very important to note, because I have felt that some of the corporates have not with a malafide intention, but even without unknowingly or inadvertently they have not be paying OIDAR taxes while they should have been paying. So this is maybe some messaging on this is required so that these taxes are complied with. Moving next. Now, this is a very important judgment, and at the outset of this webinar, I had mentioned how GST 2.0 has been relevant, and how do we link everything with GST 2.0. Now, this judgment is on compensation cess. Before getting into the facts of this judgment, I would like to say, maybe everyone, maybe a lot of us would be aware on that compensation cess has now been abolished, except for one product. So, so let me give an example on car leasing company. Now, when a car leasing company, they procured cars, they paid compensation cess while they procured cars because compensation cess was levied on cars. Now, this compensation cess is lying in their books as availed compensation cess. When they lease out the car to various corporates, what they do is, they also charge compensation cess because on output also it is leviable. Now, the moment you are charging compensation cess on output, you are able to recover your input compensation cess. Because like the way I mentioned, you can only use compensation cess input only against output, not with anything else. Now, here is a case where when GST 2.2 happened, the compensation cess on cars got abolished. So here is a case where you have input compensation cess lying in your books and you are unable to utilize it. So I'm very sure a lot of you, at corporate level, while you're dealing with, car leasing companies, they have already come up with a request that since they are unable to utilize this, it is a cost to them, and they would pass on this cost to the recipients, to the corporates. So a lot of money is involved, on this, and I think the amount is very very huge, which is being unable to utilize. So that is why it is getting passed on. So representations are being made, and I think the request is that how do we ensure that compensation cess is able to be utilized? But again, this is lying in the cold storage as of now. There's no further discussion from the government side on this. So in this case, now let me come to this case and then I link it. So in this case, the assessee was purchasing coal, and of course they were incurring compensation cess on while they were purchasing coal, and their output product was aluminium. Now on aluminium there is no output compensation cess. So in this case, while they were exporting, aluminium, they were paying IGST on export, and of course they were unable to utilize the compensation cess. So the assessee went to Gujarat High Court and they mentioned that they would like to get a refund because the adjudicating authority denied it. So they would like to get the refund of all the compensations lying in their books. And because they are unable, there is no other way they can use it. In this case, the Gujarat High Court has given this in favor of the assessee, and they said yes, you can utilize, you can get the refund of the unutilized ITC and unutilized compensation cess which is lying in your books. So now let us, so I'm not saying that you can directly link it with the current situation on car leasing companies, but here is one, one way of, linking it and getting, some kind of, a value out of it, that, that this is how, that can be projected, and maybe, and at least that can be represented to the government. So again, very, very relevant, and this is also an eye opener, for a lot of the companies who are actually lying with a lot of compensation cess in their books. Moving ahead, and I think this is the last judgment, and then I'll take the Q&A. Now, this is what I was referring to earlier on on non-deposit of tax to the government. Now, in this case, there was a retrospective cancellation of the supplier's registration, and this is a Calcutta High Court judgment. So basically, in this case also what happened is that ultimately everything was done in fair bit by the recipient. The registration of the vendor was live, active. They were paying taxes regularly to the government. The proper payment of invoices were done, and everything which is required to be done as per the proper requirement of the law, that was being carried out. But all of a sudden there was a retrospective cancellation of the supplier's registration. So in this case, ultimately, the Calcutta High Court highlighted the fact that this is something which is not in the hand of the recipient, and ideally, if the supplier's registration has been cancelled, there's no way that that there was any connivance which was there, or anything which was done in the scheme of things between the two parties. So ideally, you should be allowed ITC. So again, in this case, this was considered. So what I'm trying to highlight here is that, at the adjudication level, maybe we can face challenges by the officers. But if the amount involved is substantial, and if you're knocking the doors of the High Court, then a proper justice is being given. Yes. So yeah, I think this were the judgments all together, and we can take the Q&A. So Deepti ji, how do we want to do it? Maybe I'll go through the chat box first. Okay, so the first question is from Lokesh ji. He's saying that our assessee is FMCG dealer, including ITC for 2021 and 21-22. GST audit, there was a query raised regarding Rule 86B and raise para including cess in 1%, whereas our cess is, I think this drafting. Let me just read this again. Lokesh, you want to speak up maybe? Where the participants are allowed to speak? Yeah, maybe we can open the live session, Deepti ji, or should I take the questions?
Yes, so if you want me to allow the participants to speak, so I'll allow. One
Yeah,
hand
we can
raise is
open the
there.
chat. We can open the session for Lokesh ji at least. He has a question maybe.
Yeah, Lokesh ji, please unmute yourself.
Hello.
Yes, Lokesh ji, please go ahead.
Yeah, sir. My question is very simple, sir, regarding Rule 86B of CGST Act. With regard to tax, with regard to GST audit, FY 21, 22, 20, and 22, 23, sorry, 20, both years. The question is that, sir, ki my output tax liability, they ascertain output tax liability including sales amount, sir. Restriction
Cess,
जो
which cess? So which you are dealing in which product?
cigarette, sir, cigarette.
Okay. Yeah,
The
go ahead.
sales amount जो आईटीसी का रिस्ट्रिक्शन है सर, आईटीसी का रिस्ट्रिक्शन रूल 86B में कि मोर देन 99% हम यूटिलाइज
Correct.
नहीं कर सकते हैं, वी हैव टू पे 1% इन आउट टैक्स
Correct.
लायबिलिटी आप. But my
Correct.
submission is this sales is not a tax, sir.
Yes.
Yeah,
Yes.
the 1% liability is on output tax, outward itself, including CGST, SGST, and IGST, sir. Not
Okay. No, I got your question now. Since you mentioned the product, that's why I was thinking, why cess is mentioned. So yes, Rule 86B, which talks about various modes, wherein we can claim refund also. One of the requirement is that, we should be paying 1%, uh, output tax in cash. But that is only on output tax, Lokesh, you're right. It is not on cess. So ideally, maybe you'll have to rebut this to the officer and take it up, and that is a viewpoint we also have in our firm, that it's very clear that it is only on the tax amount.
sir.
So once you make the payment, maybe ideally it suffice with the requirement of Rule 86.
Sir, we have very much arguing before the officer, but they are not accepting. They says ki it includes says amount also in 1% of case liability, and then
Sure.
they impose interest and penalty on the amount, sir. So there is
Surely,
a
surely.
huge amount. Yeah, sir. So can
All
you
right. So
please help me in
yeah, so we can take it offline now, Dukesh ji. So we'll get in touch with you and the very relevant question. So thanks for this. And yes, like the way I said, ideally cess should not be covered as part of 1%.
thank
Surely. Thank you, Dukesh ji.
you, sir.
Thank you.
Thank you. Very kind of you, sir. Thank you.
Yes, yes. So only one question we have. Anyone else, if you have any question on this judgment which has been taken, most welcome.
So participant can post the questions or we start with our next topic. Uh, if you have any questions related with Sandeep ji's session, so please post it. Meanwhile,
Okay.
questions are coming. Bharat ji has joined us. Bharat sir, can you please unmute yourself and switch on the camera?
Yes, yes,
Yeah. So
yes.
yes, sir. Sir, would like to have your remarks and your remarks for this session. Bharat, let me introduce
Good
Bharat
evening.
Seth sir is the past president of All Gujarat Federation of Tax Consultants. He had joined us from Bhavnagar. Welcome, sir. And at present, he is member of Indirect Tax Committee. So
Thank you,
please.
Dipti ji. Good evening to all. Good evening to all. The first session was very interesting, and at present we are facing the problem of ITC denial in the case of registration cancelled afterwards by the application of the taxpayer or shoe moto, and more than 1,000 notices has been issued in Bhavnagar district only, and huge amount has been involved. And as we all know, officers are going to pass an order, and we have to face appeal proceeding. But the judgment was very interesting. Some more judgment also are there. And the second issue, in particular the CGST case, they are issuing notice under Section 74 in multiple years. And order is also they are doing in a multiple years. This issue is a very crucial issue. Anyway, both the decisions are applicable to all the, and very uh, selectively you have selected the judgment. Thanks a lot, sir. Second
Absolutely, Bharat ji.
session, thank you.
So
And the
before that,
second session,
would Bharat sir would like to take two questions and then you can set the
yeah,
tone for the next session.
okay.
So, sir, if you can see the chat box Q&A, we have two questions from our participants.
Yeah.
Uh,
Yeah, so I saw this. So what we'll do is, I think the first question is mostly on GST. When my colleague, speaks on GST audit, I think that is the right time when we can speak on this. So maybe
right.
both the questions. So we'll park this for later. Maybe, Rahul will be the right person who's speaking on GST. He'll take this up.
And the second issue, that
Yes,
will
yes,
also
both,
be taken.
both, both.
Both the questions.
Yes, yes,
Okay.
yeah.
Okay, fine, sir.
Yes, yes. I think Bharat ji was saying something. Bharat ji, please go ahead.
Yeah, please
Yes,
continue,
yes,
sir.
yes. So both the judgment which I have mentioned is a very much important to us on law also, and in Gujarat also such type of practices has been done by CGST department. Uh, Second sessions is a GST audit. 9 and 9C is a very crucial form. How and why it has been submitted is a big questions to all of us, those who are filing this GST and 9 and 9C. And surprisingly, sir, when we approach officers, they are also not understand which figure and how we have put it all figure this. So very crucial forms, and the subject selected by GyaanStation and Dipti is a very important subject. I wish that this second session also be beneficial to all the participants. Thank you, sir. Thank you very much, Dipti.
Thank you. Thank you
Thank you,
so
Bharat
much.
ji. Thank you.
Thank you, Bharatji, for joining us
Thank you.
and by short notice. And Bharatji is someone who we always look up to and always available to help. And like he's like a go-to person whenever I visit Bhavnagar. He makes sure that
Yes.
all the comforts have been provided and to connect us and help us out with all our work there. Thank you, Bharatji, for all the support.
All are welcome to Bhavnagar.
Yes, sir. Thank you. So now moving ahead with a very important session now, the GST audit. And before that, we have Rahul ji with us for GST audit, who is going to take the session on this. And 1 minute. This is some change of session, so would like if participants want to have 1 minute break, then please give a thumbs up. Else we can start with the session. If you want to have a break of 1 minute, then we can have a break of 1 minute before starting with the next session. Or we can continue as it is. Okay. So just will 1 minute break we will have or continue. Okay. Meanwhile, I would like to speak also about one of our associate partner, Choice Group. So Choice Group is a financial conglomerate. There we provide multiple services in financial sector. It's a complete ecosystem of financial services. So we are category 1 merchant banker also. So SME, main board, IPO listing, both we do. Then we are into wealth management also. At present, we are managing the wealth of around 8,000 CR. So if you have any HNI clients or you want some advisory for investing in bonds, government bonds, GSEC or MLDs products, SIPs, PMS. So you can anytime connect very well with me. My number I'll just share in the chat box, or insurance, corporate insurance and NBFC, a lot of other verticals. So for any help you need with respect to the financial services or advisory, I'm always available 24/7. You can WhatsApp me, so I can reply within like 8 to 10 hours maximum time. Generally, I reply at once only. So you can connect me anytime. And yes. So if any other questions are there, then we can. Sorry. So Darshit ji has joined us. Darshit ji has joined us from GST. Darshit ji, welcome. Yeah. Sir, you are on mute. Mute पे है सर आपका. Kindly unmute your mic.
Deepti ji, shall we get started?
So again, friends, we are having a very interesting topic. We are starting. Hope everyone had a break, small break. And now we have CA Rahul Baldi ji with us, the Associate Director of Deloitte. And he has over 9 years of post qualification experience in servicing large multinational clients in the areas of GST, service tax, VAT, excise, customs, foreign trade policies matters. And he has playing an immense role in strategizing the IDT positions for new business lines. His key responsibilities involve, along with assurance of timely compliance, he remains occupied with advisory services to analyze the IDT implications and to ensure the most viable tax positions aligning with the business objective. He also handles the litigation matters, which also includes the representation services before appellate authorities in the matters related to taxability, ITC eligibility, POS issues, etc. While he looks for many sectors, but primarily focus on insurance, banking, and NBFCs. So, with these words, Rahulji, welcome to GyaanStation and very important topic GST audit. And the dice is all yours. Over to you, sir.
Thank you. Thank you so much, Deepti ji, for all the introduction of for setting the context for the hottest topic of the December month, at least for the GST professionals, because GST 99C we all are struggling with, or we are in the process of filing the returns now. So I'll be covering the GST audit because while we file the GST compliances, the annual compliances in the month of December, but those are picked up by the authorities at a later point of time, wherein they questions anything or everything whatever has been reported under the annual compliances, and then they take up the cases for litigation as well. So this is going to be very interesting phase for all the GST practitioners. That is the December month. So I'll get started with it. Give me a moment just. Let's share my screen. Yes. So while we all have handled the GST audits in the past, because many of the audits have already been concluded for our clients, and we might be part of those audits wherein we would be representing the client before the authorities. Now, we might have struggled during the course of GST audits which have been concluded till now, because we are coming with a different mindset. That is, the litigation should be at the minimal level, but the authorities are coming with a different mindset. That is, want to find out the revenue leakages at the maximum level. So therefore, we might have struggled during the course of audit that how should we handle a different type of authorities, and why the authorities are looking at transaction in a different way or with a different lens, but we are explaining the transaction in a different way altogether. So why there was a gap between the mindset and what has happened, or what could have been better planning which could have been done in order to handle those audits, so that the struggle of both the parties, that is the assessee as well as the GST authorities, could be minimal. So I'll be covering the GST audit, and we have kept the same theme for GST audits as well. The theme which Sandeep has set up in the at the time of introduction itself, there's the practical theme. So in GST, definitely we have lots of compliances and automations, but along with that, we have many practical approaches to deal the GST law. So continuing the same theme which we have kept for the judicial pronouncements, which Sandeep just discussed, we are keeping the same theme for GST audit, that how we can approach the GST audit practically and what should be our mindset towards it. But in order to do so, keeping a mindset for the GST audit, we just need to understand the mindset of the GST authorities as well, because then we will meet the expectations which we normally lack on our part. That is, we go with our mindset, but we don't have the check the mindset of the authorities, which creates a big gap in the understanding, and it can lead to many more struggle at our end. So coming to the GST audit, the way I mentioned about the mindset, it is very critical to understand why the GST authorities are picking our case for the GST audit. What is the purpose behind conduction of the GST audit? So the first purpose definitely is in order to verify the accuracies of the taxes which has been paid by the assessee. Now, under GST, what is a normal course of action done by the assessee? He self-assess the tax on himself or herself and accordingly pay the taxes to the government based on his knowledge or based on the accuracy which he thinks is the fine from GST perspective. Now, in order to determine whether the taxes have been actually paid accurately or not, the GST authorities conduct the GST audit with the foremost purpose, that is the verification of the accuracy of the taxes paid. I mean, let's say if an assessee has paid 100 rupee of tax through GSTR 3B, or let's say by DRC 03, whatever the mode he may opt for payment, whether those taxes are accurately computed or not, because it's a self-assessment tax. Okay, so this assessment is done only by the taxpayer, and that has not been verified by the authorities at any point of time. Nowadays, definitely there are many more automation tools which have been deployed by the authorities to identify at the first level itself that whether the taxes computed in the GST returns are accurate or not. But definitely at the time of audit also, they try to identify any leakages at this stage so that any recovery could be made from the assessee. So the first purpose of conduction of GST audit is the accuracy, to verify the accuracy of the taxes paid. Now, when we talk about the payment of taxes, it will go hand in hand with the ITC which has been utilized or which has been availed by the assessee, because many of the taxpayers are always using the ITC for payment of the taxes, and the balance is paid through cash. So whatever payment which has been made through ITC, the authorities try to establish that the ITC is duly eligible to the assessee. Because if in case any payment which has been made by utilizing an ineligible ITC, there is a leakage for the revenue. So that is why the authority's second objective is, or the second purpose is, to identify the eligibility of the ITC. Now, while doing so, majorly they look at 17.5, the reversals which would have been done under Rule 42, 43, or any other rule, whether those have been done correctly or not, whether whatever Rule 86B says that the utilization should be restricted to 99%, whether that has been done or not. So all these nuances related to the ITC or in relation to the ITC, that is verified as a second purpose. So once they have established that, okay, the taxes have been computed correctly, the ITC utilized or availed is in line with the GST law and procedures, then they come to the next course or next purpose, that is the quantification of the benefit or the qualification of the benefits which have been provided under the GST law and that has been availed by the assessee. So let's suppose if someone has claimed an exemption benefit, considering that the status of the entry or the transaction is under the is qualified under the mega exemption notification, or which is notification number 12/17 or 13/17. So let's say if whether those supply which has been provided by the supplier, whether the exemption benefit which has been availed is in line with the conditions mentioned in that notification. I'll give you one classic example over here. The charitable activities which is conducted by the trusts or NGOs, whether those are actually a charitable activities in the eyes of the GST law as well. While that could be a case where the charitable activities which are conducted by a trust are actually charitable in accordance with the income tax law. But the definition of charitable activity is different under the GST law, because what is charitable under income tax law is not charitable under the GST law. One example could be wherein, let's say, if a assessee is providing the supply of trainings to the participants, Now, whether those could be because let's say if the trust or the company or NGO has taken a 12AA certificate under the Income Tax Act, then the services provided by the trust would be qualified as a charitable activity under the income tax law. But the GST law is quite different on that aspect. The GST law says that those would be treated as charitable only if those have been provided in accordance with the notification number 12. So let's say if the same is not in the recognized course of education, then that could not qualify as a charitable activity. So you can see that the exemption benefit availed under one act could differ with the exemption benefit available in the second law. So it is the third purpose of the GST authorities at the time of audit that whether the exemption benefits which have been availed, whether those are in line with the exemption notification issued under the GST law. One more example could be wherein a specific condition is attached to an exemption. If the assessee is not fulfilling any of the condition specified to claim those exemptions, then also the exemption benefit is not available, and then the entire gambit of the exemption would be challenged by the authorities and the tax revenue or the tax litigation could be initiated. So if you see, this is the third purpose or pillar of the GST audit. That's the third mindset which the authorities keep while conducting any of the audit. Now, when they have identified these three purposes, there is one more purpose that is on the compliances part. That is, even if you are fulfilling all the three previous parameters which we just discussed, there could be leakages at the time of compliances, which we are doing now as well, which is in the form of annual filings or annual compliances for the financial year 24-25. So whatever disclosures which are required to be made, whether those have been made in accordance with the GST law. Gratefully, we have FAQs released last Thursday itself, wherein the authorities have clarified certain disclosure mechanism for the GSTR 9 and 9C. Let's suppose if someone files the GSTR 9 and 9C today, and if the person does not follow the FAQs or the answers the answers mentioned in the FAQs, and there is any disparity between the disclosures done in GSTR 9 and what was expected to be done from the government's end, then the authorities will definitely challenge those compliances and will take that point in the GST audit. So it is very important or imperative to determine the right compliance disclosures and to file all the GST returns within the due course of time itself. Now, this is not only on the GST audit is not only conducted with the purpose of determining the GST leakages or basis the GST filings only. It is also dependent on what has been filed or what has been served, disclosed in other statutory laws as well. Let's suppose if a turnover of 100 rupee has been disclosed in the income tax, however, in the GST returns, it is only 80 or let's say 120. So whatever the reconciliations between the two, the authorities try to find out that as well. It is also relevant, let's say if a customer has disclosed that the customer has deducted a TDS of 10 rupees on a 100 rupee expense, uh, recovered expense cycle, but on the other side, the supplier has shown only a 50 rupee transaction with that particular customer. So in that case, you can see there is a reconciliation difference between the filing done in one statutory record compared to the statutory records of the GST. So that is why that is also relevant for the authorities that these should be taken care of and a proper reconciliation should be there. I'm not talking about the financials because that is anyway given. The reconciliations between the financials and GST returns should be done with GSTR 9C itself. So that is already taken care of by the assessees. But let's say in RBI disclosures or disclosures made to RBI, IRDAI or MCA, or let's say to income tax, transfer pricing, or any of the authorities, wherever the disclosures have been made, whether those are also reconciling under the GST law or is there any challenge? In the competitive environment or in the technological advanced environment wherein we are expecting GST 2.0 as well. Now, these are very critical because the details fulfilled or the details disclosed in one law will definitely be coming to the second law and the details should be reconciling. In case that is not there, you are definitely inviting the GST audit at your premises. Now, these are the main principles or purpose of conducting the GST audit. Now, how they select a case for the audit? We understood that, okay, these are the purpose for audit, but what are the parameters for selection? While there could be multiple parameters, but critical ones I have put in on the slide, because basis these differences or basis these parameters, there is a very highly likely chance that your case will get selected for the audit. The first and foremost is the mismatch in returns. No reason to explain these things, because currently also whenever you file GSTR 3B, immediately you get a DRC 0, 1C, 1D, 1B, or any other type of notice. Now, while someone has mentioned in the chat box as well in relation to the question on DRC 01D, which have been served through an email and the GST portal, and they have complied with the reply as well, but there was challenge in the case where this has been the bank account has been blocked, or a DD has been asked for that. So that is well within the parameters or powers of the authorities. They can do so in interest of the revenue. However, there could be submissions to the authorities that the law has been complied with, and therefore the same should be released right away, because this is well within the four corners of the law. It is also relevant that the bank account should be attached only to the extent of mismatch identified by the authorities, and not the entire bank account. And the way Sandeep also mentioned in one of the case law, wherein the electronic credit balance available on the day of mismatch identified, only to that extent the ITC ledger should be blocked, and not the entire ITC ledger or the future ITC ledger should have been blocked. So similarly here also, only to the extent of mismatch, only to the extent of discrepancy identified by the authorities, that could only be matched, that could only be blocked upon by the authorities. Now coming to this one, the first one is well explained. The second one is in relation to the significant variation. Now, while we do the MIS for our businesses, definitely the authorities are also doing a trend analysis for us, wherein they identify their own taxes, that what has been paid in the last year or in the last quarter or the last period. Then they compare it with the current month or current year, the relevant period. They take the relevant period common. Now, if there are significant variations, let's say there is a variation of 80%, the tax which was paid was 100 in last year. However, in this month or in this year, you have paid only 80 rupees, let's say only 20 rupees of the tax. So there is a variation of 80%, definitely. So that will trigger your GST audit. There is very highly likely chance that your case will be picked up on for the audit. So that is also one reason. They will also do a analysis based on the industry these days. That is, if one industry, the one player of the industry is doing very well, what's the challenge in the second player? Because that could there could be a revenue leakage, or there could be an exemption which has been availed by the second SSC and which has not been done by first SSC. So they are doing all these kinds of analysis at their end with all the technological tools those are available with them. They are doing that, and if there are significant variations in the disclosures, then they are challenging they are selecting the case for the GST audit. There could be some industry issues as well, which are very peculiar in the market or which are running around in the market. Then if there is any industry issues wherein they feel that there is a there is a need of the GST audit, then they conduct the GST audit for the entire industry players as well. And whatever the call which has been taken by the CBIC, the board, then accordingly they conduct the GST audit and take the litigations accordingly. AI fetched reports, the one which we just talked upon, that is DRC 01C, D, or any other type of order or the reports which are there, and then those can be triggering the GST audit by the authorities. So that is also one mechanism for selection of the cases. If it has been recommended by some external agencies, then also the authorities are bound to take those cases up for GST audit. If they also feel so, then they definitely take up the GST audit case. Sometimes it could be targeted audits because you fall under the large taxpayer unit of a specific category, wherein the authorities have been directed by the board to take the audit in a particular year. Then the authorities take the cases for the audit. Now, these are only the examples. There could be various more parameters which can trigger the case for audit. But these are the key principles of parameters which definitely any mismatch in any case or any parameter can get your case selected for the audit. Now, while we talked about the cases selection, there are some guiding principles which has been defined for them for conduction of the smooth audit. First is with respect to the adherence to the risk factors. So every SSE has been given a risk based on the details disclosures they have made under their compliances. And in case if there are any risk on higher side, then a detailed audit would be conducted. In case the risk associated with the SSE is on a lower part, then the quantum or the details asked by the authorities could be on the lower side as well. So they are guided towards that, and they are adhering to the risk factors which have been developed for each SSE. Uh, One more principle which the board has defined for them is their audit should be in line with the departmental circulars and notifications only. They cannot go beyond the parameters of the GST law or the four corners of the GST law. So it should be in consistence with the departmental circulars, notifications, and the judicial pronouncement defined by the GST, by the appellate authorities or the higher levels. Now, while doing an audit or while initiating an audit, there should be a sound pre-audit plan that should be there. So in order to conduct the audit in a smoother way, that is very relevant for the authorities. Therefore, they do a desk review before initiation of the audit. This desk review is conducted based on the details already available with them. That is the GST returns or the disclosures made by you in your filings before the authorities. Basis that they chalk out a final uh, plan for conduction of the audit. Moving on to the next principle, they also emphasize on a systematic audit because if they focus on one or two area, that will not lead to the final conclusion of the audit. Therefore, they have to do it multifold, and in order to do so, they should have a system in place wherein what the team members allotted for the audit by the department should conduct the audit in the plan which has been devised at the third stage. Now, it's a continuous process because once the audit is started, there could be many more details or documents which have been submitted by the authorities, which have been submitted by the SSE. So that is why the authorities regularly review the plans which was developed before the initiation of the audit, and they do a systematic modification to the plans so that the audit could be concluded in the way they want. They are mostly focused on the scrutiny of the records because these days any mismatch in the record could trigger the GST notice for them, and there could be a way out for, or there could be a way for revenue leakage. So they concentrate on scrutiny these days, wherein they identify the deviations. So this is the guiding principles which is there in the GST audit manual as well for the authorities, and whatever deviations they have identified during the course of audit or whatever records they have verified or scrutinized, they record those proceedings in their logbook, and then they issue the final audit report, a preliminary audit report, which gives an opportunity for the SSE to submit their responses against the observations made by the audit team. And there is a guiding principle as well, wherein it has been stated that a fair opportunity should be given to the auditee whose record has been audited in order to understand what's the say of the auditee, and if there are any pointers wherein an additional take could be additional say the auditee has, then that could also be factored in before releasing the final audit observations. Now, one interesting factor, which is the last one, that is the implementing a feedback mechanism. Now, this has not been talked upon much in the market because this is giving a feedback to the authorities basis the GST audit conducted by the authorities. You might have heard earlier, last, I think 2 years back, there was a mechanism which was going to be developed for the GST authorities as well as for the SSEs, wherein authorities can give a rating to the GST registered person, and basis that the risk can be identified and accordingly audit could be conducted. However, one more principle which has been devised in the audit manual is in relation to the feedback mechanism by the auditee to the authorities. So it's a different one. So this is also a relevant one for the GST audit principles. Now, this is the process wherein what we have discussed is there is a mindset in the GST authorities mind. Then they select the auditee based on parameters, and in order to devise the audit plan, they conduct the desk review. That's the second step. And this is the desk review. They devise the audit plan. After that, they conduct an on-premise visit. I'll not taking much time on the entire process, but the relevant one is the on-premise visit. It is recommended that whenever the authorities are coming to your premises, please get an attendance entry for them, because under GST there is a specific provision which says that the time limit for conducting the GST audit is 90 days from the date the authorities visited your premises. So it is relevant to keep a track of that date, because if in case the audit is not getting concluded in the uh, period specified in the GST law, that could be a argument at the appellate level or at the higher level. So it is relevant. In some cases, the client have approached us and stated that we don't keep an attendance register at all, or we don't have an entry gate register as well. Then we have suggested that whenever the audit initiated and you receive ADT01 from that day itself, please keep the register handy. Whenever the authorities are coming to your premise, please keep that entry in your record so that at the later stage that can be used in the arguments. Many a times the authority says that what's the need of it, but there is the actual need because this is benefiting the assessees. So that is crucial. Now coming to the next one, definitely in the preliminary observation of at the final observation also, the authorities are bound to give a fair opportunity to the assessee. In case the same has not been provided, then we can very well take a ground at the appellate stage that the natural justice has not been followed or the authorities have not act in accordance with the four corners of the law. So this is also a critical one. One important point, because you might have already handled the audit from the assessee's point of view, there is another case wherein special audit could be conducted by the GST authorities. Now, how's this different from the normal course of audit where we represent the assessee before the authorities? Section 66 defines the special audit in cases where GST authorities are not in a position to conduct the GST audit only on their own. So they need some professional guidance or professional help from the industry, from the chartered accountants who have been nominated for this particular special audit, wherein they can request the chartered accountancy firms to conduct an audit on their behalf for the assessee. So this is a quite a different case wherein till now we are always always representing the assessees before the GST authorities. But in this case, what will happen? We will represent the authorities against the assessee. So this is a very good opportunity which could be casted on, or which could help the chartered accountancy firm to conduct the GST audit, or could be explored as a avenue, and this can help the person, the CA firms, to conduct or to assist the GST authorities as well. And it can submit its report directly to the commissioner so that the commissioner can take a future course of action accordingly and on the basis of the report submitted by the CA. So this is all talking from the authorities' point of view. Now the critical ones, Sandeep already mentioned that the show cause notice for multiple financial year should not be issued, of single SCN should not be issued under, because there is a chance that 73, a few years could be covered within the bracket of 73 and few years could be covered within the bracket of 74. Here are the timelines which we were talking about. So determine the period of limitation. So let's suppose if 17-18 is covered with 20 to 23 and the SCN has been issued under section 74. So now if you see for 17-18, the 73 timeline as well as the 74 timeline have already been lapsed on 5th August 2024. But because the authorities have included 20 to 23 as well, so the authorities try to issue the notice till 30th June 2028, which is the last date for 20 to 23 SCN under section 74. So this is a critical one to note that, and there we can take the help of that particular case law, which says that SCN for multiple years should not be issued. So these are the timelines bound for SCN. Now I have discussed from the authorities point of view. Now let me discuss the point of view from because we all are representing clients much. Therefore, let me talk from the that angle as well. What we should do whenever there is a GST audit which is getting conducted for our client, or as a client also, what we should do. So the first step I always suggest is planning is better than anything else. So pre-ready yourself before the audit starts or initiates. Now, this is very critical because we always react to a situation rather than getting us pre-ready for that situation. But it always helps when we pre-ready ourselves because prevention is always better than cure. Now, how we can do that, I'll cover it in the next slide, but that is quite a relevant stage in order to handle the GST audit very smoothly. Very simple ones, that is collation of all the details and documents which are readily available with us. At least those documents could be strategized or could be kept at one place so that whenever there is a GST audit, that can be submitted at one go and the authorities can take a look on those things. And basis that, the desk review can be conducted by the authorities. One critical aspect of pre-readiness for the audit is review of the documentations which are readily available or which are available with the industry or players as well. This could include the review of agreement, review of invoices, documents, others which are prescribed under the GST law, and also to get a eye on the issues which are prevalent under the industry or for the respective client. Now, how that would be relevant, because whenever you are representing the case before the authorities, be it the client directly or be it as a representative for the client, you have all the details in back of your mind. So whenever the authority asks any question to you, you have the backup plan ready for that particular question, or you know that yes, there is a challenge in this regard, or how you want to present your case, you can better prepare before the authorities. So it is relevant that you should pre-ready yourself before the initiation of the audit. Now, once the pre-readiness is there, and you can prepare upon receipt of the notice, what details are required to be submitted, analyze the GST audit notice. Is it for 1 year, 2 year, 5 year? How is it? And also discuss the plan with the authorities, how they are getting it conducted. Because in many cases, we have seen that the notice has been received in the month of April, but the audit itself has not been initiated till December. So it is relevant to call up the authorities and ask them to visit the premises, because that moment the timeline starts for the authorities as well. So once you receive the notice, please reach out to the authorities, keep the details or documents handy and have it submitted with the authorities, and also ask the authorities to visit the premises of the SSE. At the time of visit, uh, please keep the entry register handy and get it signed by the tax officer. Even if only one person of the team of auditor is coming, then also please get it signed in the entry register, because it will be helpful in establishing the date of initiation of the audit, and that will help you at the later stage. Now, at the time of visiting the tax office, please keep the business operations plan ready, wherein you can explain the business operations or the business operations of the company, and that could help the authorities also plan their audit in a way which is beneficial for the SSC as well as for the authorities. After visiting the tax office, representation, listening for the audit observations, and finally the way forward. That is, once you receive the final audit report, then you can plan that which allegations are actually there in the declarations of filings which you have done. If there are any cases of revenue short payment, then that can be done in that moment itself, because that will give a liberty to you, that is the reduction of interest and the penalty amount as well. But in cases where you feel that you are on the right side of the table, or you have dealt it in a particular way within the corners of the law, then you can litigate it further by way of SCN and appeals. Now, while I talked about much on the pre-audit part or pre-readiness part of the audit, how can you do so? Because that is also relevant, that what things should be done before the audit itself, or what can be prepared before the audit so that the documents or the details could be submitted in a proper way to the authorities. The critical ones are in relation to the reconciliations. These days, many a time we have noted that the authorities are relying on the reports which are generated from their backend system or the automated tools which have been deployed by the ministry. Basis that various reports are getting generated, which shows that the reconciliation differences, so that can be taken up before the audit itself, because these details are in our hand only. The 1 versus 3B, the 2A versus 3B, and 9 versus 1 3B. These are definitely be there. So reconciliations could be kept at the first stage itself, and apart from these reconciliations, there could be some tax differences as well, which could be identified on the GST portal as well. Those can also be taken care of while doing the reconciliations. And GST 9 is a very crucial or critical time when we can identify all the nuances of a particular financial year. Because if we have done any mistake in 1 or 3B filing, then we can take those reconciliations in, we can correct those reconciliations in GST 9 and 9C. This will help us in submitting the details and whenever the GST audit gets conducted for that particular financial year. Now, as a chartered accountant or as a representative to the SSC, it is quite relevant that we should keep the reconciliations handy in our account as well, because there could be a possibility that when the audit will gets conducted, let's say after 2 years, the audit starts for 24-25. Then the client personnel is not available or the client personnel has changed, then there could be challenges for the client to extract those reconciliations. But if we have those reconciliations handy, then we can definitely give an assurance to the client stating that don't worry, we are there, we have all the reconciliations available with us. We will be in a good position to represent the client before the authorities, so that we can do at least from our end. The second part is in relation to the collation of documents, that is keeping all the statutory documents like sales invoices, trial balance, purchase register, purchase invoices, asset registers, or the reversals which has been done. Those can be kept handy. Definitely, along with reconciliations, not only limited to the GST, but to the other statutes as well, like 26 years income tax reporting, transfer pricing reporting, or SEZ portal, or to the customs authorities. Those can also be kept handy, available with us. Then a proper resource can be allocated for the GST audit that can work on these reconciliations, because the person has worked on these reconciliations and submissions. That person would be the right person to handle the GST audit. So that assignment could be done before the audit itself, and keeping all the issues in mind before the audit gets initiated, because this will help in taking the case in a better way rather than just pick and choose, getting it pick and choose. Now, I'll take the GST 9 and 9C changes later a bit. First, I wanted to discuss on the IMS. So the IMS is in relation to the invoice management system, which we were talking on the GSTN 2.0. So this is part of the journey for GSTN 2.0, wherein the invoice management system has been rolled out by the authorities. As of now, this is only for the this is on optional basis. However, sooner or later, this could become a mandate as well by the authorities. Now, how the IMS actually works, I'll take a minute for discuss that. And after that, I'll come to the changes which has been introduced by IMS. The IMS system functions in a fashion wherein any GST invoice which has been disclosed by a taxpayer, which have been disclosed by a supplier against the GSTN of a recipient, the recipient has a mechanism or an option either to accept, reject, or keep the transaction as pending. Now, these options have been designed in a very fabulous manner, wherein by accepting a particular invoice, you are not only accepting the invoice, you are also giving a sign off that this transaction has actually happened between you and the seller. This could reflect in a fashion that will reduce the chances of the bogus invoicing or the fake invoicing, which is very well prevailing under the GST law, and the government is trying to curb those transactions. Now, in order to do so, this will help, because by accepting the transaction by a recipient, this will help the establishment of the genuine transaction wherein the supplier is saying that I have supplied this particular goods or services to XYZ customer, and the customer is also giving a sign of yes, I have received those supplies from the supplier. So this is relevant. Now coming to the next part of it, if a transaction is rejected by a recipient. Now the rejection refers to a situation wherein the supplier, wherein the recipient is rejecting a transaction and stating that this transactions I have not dealt with. If a supplier is showing this particular invoice, this could be a fake invoice or this could be related to someone else. So this is one mechanism where the government is trying to find out the curb the cases of the fake invoicing. So this is the system of communication, actually establishing a communication between the supplier and the recipient. Now in this case, what happens is whenever a transaction is disclosed by a supplier, the same will flow to the IMS dashboard of the recipient. Whenever the invoice is appearing in the dashboard of the recipient has 3 to 4 options. First is accept those transactions. Second is reject those transactions if those are not pertaining to him. Third is keep the transaction as pending because there is a chance that the invoice has not been received by the recipient till now. However, the service or the supply has already been provided by the supplier. And that is why the transaction could be kept as pending. The fourth is the no action. Let's suppose I have not taken any action as a recipient. Then the government is saying that if you are not taking any action, the silence means the acceptance over here. And if you are silent on any transaction, then it's a deemed acceptance. Now, this is relevant for the credit notes, debit notes as well. Because in credit notes or debit note, what happens is I have not received the copy of the credit note or a debit note. But earlier, when the IMS system was introduced, then at that time, the government was saying that there will not be cases for pendency of the credit note because at that moment, the government is asking you to reverse the ITC whenever you accept any credit note. So the credit notes cannot be kept pending under the IMS dashboard earlier. Now, there could be cases like timing differences, wherein the supplier has issued a credit note, but that has not been accounted by the recipient till now, and that is why that is not appearing in the records of the recipient. Now, because of that, those credit notes are kept pending, are required to be kept pending, but because that facility was not there, the government introduced that facility of pending credit note. But this is also only for a particular, only for 1 month. So the credit note disclosed in the month of May can only be kept pending till June. In June GST 2B, you need to explain that. You need to take the action. Sorry, June GST 2B, yes. So these are the key changes from IMS side. One is pending credit note. The second one is the relevant one, the non-rejection of bill of entry filed for the import of goods. So whatever bill of entry which have been disclosed on the IceGate or the customs portal, if that is in relation to the import of goods, that cannot be rejected under the IMS portal because that will be accepted or deemed accepted at the IMS portal. The third one is the relevant one, wherein you can change the GSTIN of bill of entry. Let's suppose the goods have been procured at Maharashtra. However, by inadvertently or by mistakenly, the importer has filed the bill of entry under the GSTIN of Tamil Nadu. In IMS, you will get an option to change the GSTIN to correct the GSTIN and to claim the credit correctly in the respective GSTIN. So this is a welcome move from by the industry because earlier that option was not there. Then coming to the next one, the remarks functionality is also being made available wherein you are keeping the transaction pending. You can put a remark to it that why you are keeping it pending so that at the later stage, you need not to verify entire transaction again. The changes in format of GST 2B, which is in line with the above 3-4 changes, what was there. And there could be an option, there is an option available that is amount of ITC to be reduced. So against a credit note of any invoice, if you want to reverse any credit specifically, then there is an option that out of 100, only 80 needs to be reduced. Rest 20 is fine. And rest 20 is excess reversal. So I don't want to continue with that. So that is why only 80 is need to be reversed. So that option is available now. Now coming to the GSTR 9 and 9C changes, I'll just open that. Give me a second. Wherein the recent ones are very relevant, wherein on Thursday, the government has identified various cases wherein that can be in relation to the disclosures. So those are the relevant one. Just give me a second. I think my presentation has gone. I'll just present it back. Yeah, it is up. Okay. The table 4G, one which has been introduced in respect of the tax liability for e-commerce operator, wherein the supplies on which the e-commerce operator is liable to pay tax, that can be disclosed over here, because this table was not there in earlier GST 9. This has been brought as a new change. This is in line with the GST 1 changes which have been made earlier. So the GST 9 has also been amended accordingly. On the similar line, table 5C1, which is representing the tax liability again for the e-commerce operator, that has also been introduced in the similar line. Coming to the next one, wherein an option of disclosing the exempt and nil weighted supply under the exempt head only, and there is no need of bifurcation between the exempt head and the nil weighted supply. The critical ones are in relation to table 6, wherein table 6A1 has been introduced by the government in order to disclose any prior period GST ITC which has been availed in the current financial year. So let's suppose if you have availed 23-24 credit in 24-25, then that entire ITC need to be disclosed under 6A1 only, and that cannot be disclosed in any of the rows of 6B to 6H, or as well as based on the latest FEQ, that reversals as well should not be forming part of your table 7 in respect of the reversals made for 23-24 invoices. So this is a critical one, because now table 6B to 6H as well as table 7 should only contain the details of the ITC availed or reversed in accordance in relation to the invoices pertaining to 24-25, and 23-24 should not be included in any of such table. Now this will be lead to a difference between the table 4C of GSTR 3B or the net ITC availed under the GSTR 3B. The difference will be there, and if we compare the table 4C with table 7J of GSTR 9, then there will be differences, but the government has acknowledged that yes, those differences would be there, and the government is fine with those differences. So in a nutshell, table 6B to 7J will only contain the details of 24-25 invoices, even though those are appearing in, let's say, in GSTR 2B of next financial year or availed in next financial year, but that can be forming part of 6B to 7J only. So the invoices on which credit availed under 25-26 for 24-25, that can come to table 12 or 13, but for 6B and 6H, 6B to 6H and table 7, 23-24 invoices or prior period invoices will not come in any of these tables. Now, the similar line, table 8 has been amended, wherein table 8B is excludes the value of table 6H, because table 6H only reflects the details of reclaim ITC, and that is why those details have been excluded from table 8B now. Table 9, there is a specific column which has been added now, wherein the government is computing the difference between the tax payable and taxes paid, and keeping a column specifically so that the authorities can directly look at it if there are any differences. If there are any payment of additional liability through electronic credit ledger, that can also be disclosed in the respective GSTR 9. In a similar fashion, GSTR 9C has been changed. Few FAQs have been released last week only, wherein the government has clarified in relation to table 12 and stated that the table 12 will contain the details of 24-25 invoices only. In case if there are any 23-24 invoices, that can be excluded from the disclosures in table 12 as well. And so basically GSTR 9 and 9C are more focused towards the invoices pertaining to 24-25. So entire disclosures need to be made, entire disclosures should be in line with the 24-25 invoices only. So accordingly, the changes or the FAQs are getting released by the authority, by the board, to keep the transactions limited to 24-25. However, there could be differences from the financials as well as from the other statutory filings like 1-3B as well, wherein the details disclosed of 23-24 would also be forming part of your GSTR 3B. But now the government is saying that in GSTR 9 and 9C, please include details only in relation to the 24-25. So I'll take a pause over here because I think we have covered all the pointers in relation to the today's topic, and we would be happy to take the cases now, the questions now.
Yeah, so Rahul, I think there are a lot of questions I've tried to answer, quite a few of them online itself. But
Perfect.
there are few pending ones. Maybe I didn't get time for that. We can take also because we waited for the GST audit session to get over.
Right.
So the one question I think which we have still open in the Q&A box is from Zalak Dalal. So Rahul, you can take that up because that pertains to
Yes.
GST audit, etc. Yeah.
Yes,
Okay,
yes.
Anand.
Actually, okay. So there were two questions. One I have already taken during the discussion. The second one is in relation to the transfer of cash ledger balance from one GSTIN to another GSTIN, that is Maharashtra to Gujarat. If the same are in relation to the same pen of the SSC, that can be transferred. There is an option available under, I think, PMT 09 or PMT 11. These are the forms relevant for the transfer, but the SSC should be under the same pen. Then only the transfer can happen, not within the group entities, but within the same pen, this can be done. So there is an option available on the GSTN portal.
Yeah, there was one question on composition scheme, composition scheme SSCs, whether it is possible for them to get a GST audit notice. Yeah, Section 65 does not debar any, person, to not get a GST audit. So it is open for everyone. So yes, GST audit notices can also come to composition dealers. So that I think I have answered. There was a question on how to handle a situation where e-invoice has been prepared and after 24 hours, the dealer comes to know that e-invoice was wrongly prepared. How to handle this situation? So Rakesh, I think there's only one option in this case. We'll have to issue a credit note and raise
Yes.
another e-invoice because 24 hours timeline is something which is mandatory. Now, earlier it was 7 days, but now I think we need to follow. Is there anything which I think there's one more question. After completion of audit under Section 65, can higher authority again reopen the case for same year and issue notice under Section 73 or 74? So Rakesh, we have heard cases where SCN is issued under Section 73 and then another SCN also is raised under Section 74. So switching from Section 73 to 74 has been possible. It's done by the authority. But that is only done, only when, the period of limitation under Section 74 has not lapsed. So that is something we need to keep in mind, and then, this is possible. Any other question? Rahul, you can also check. I think there's a lot of chats here. Am I missing anything?
There is one more question that RCM paid before November 2025 for 24-25, where to show in GST 9. If we shown in particular column negative value shown in GST 9, what to do in such case?
So Darshit, this has been clarified in the recent FAQs that any RCM liability which has been paid after April 2025, even if it is in relation to 24-25, that will not form part of disclosures of GST 9 or 24-25. So this has been clarified in the recent FAQ. That will come under the GST 9 of 25-26 only.
Okay, sir.
Yes. It has been a very interactive and engrossing session, I think, for all of us, and a lot of questions. So glad, that we had so many questions around. I think one more has come while I'm speaking
Yeah.
from Harish. So Rahul, I think this is for you.
So Harish, this is in relation to, I'm just reading the question that the order has not been passed after 100 days. Can the department ask any additional information? So I believe the date of entry in the entry register has already been kept, and those dates have been very well complied with. If in cases the authorities have not been visited the premises, then there is no timeline attached to it because there is no timeline which has been prescribed under the GST law. But for once the authorities visits the premises, then the time clock of 90 days starts up. definitely the authorities are doing so. If there are if there are any approval from the commissioner or higher jurisdiction, then they can take up the additional details from your end. But that can be definitely argued that the 90 days have already been lapsed from the start of the audit.
Okay, so I think we are done with all the questions, and Deepti ji, the remaining 5 minutes I devoted to I'm passing it to you, so please take it up, and thank you everyone for the session. Yeah, Deepti ji, over to you.
Yeah, thank you so much. And most importantly, I think we have covered all the questions. Yeah, one more has just popped out. Threshold limit to file GSTR 9 and 9C. I think that is covered.
Yes, I
It's
think
already covered.
Yes,
Yes.
part of the presentation also.
Yes, it was part of the presentation. So I think it was very well carried on. And thank you both of you, Sandeep ji and Rahul ji, for creating such a good, sharing such a good insights and covering even your practical experience in today's session. Most importantly, participants, friends, please, before leaving, give your valuable feedback for today's session, because it's very important for the speakers, as before taking any session of 2 hour 1 hour, they have to do like usko multiply by 10 20 कर दो, उतने hours of study उनका खुद का लगता है. So that much efforts each speaker have to put before coming in front of the public. So heartiest congratulations and a big round of applause to Rahul ji and Sandeep ji for conducting this session so well. And we would like to see you more. And someone has just raised the hand, but sir, we would not be able to unmute you. Better if you can write down the question. It will be more helpful. And thank you. Yes, it's our, like, we are very much passionate about educating our and updating our audience, followers, and the professional friends, colleagues who are attached with us, and that keeps us motivated to come up with one every week with one or with any topic which is relevant to you. And December is a GST audit season. So we thought and 2025 landmark judgments. So nothing can be more beautifully created other than this in the month of December for GST professional, tax practitioners, chartered accountants. And cherry on the cake is the partners from the Deloitte itself. Yeah. So thank you so much. Next week again we are having one more session, and before that 2 queries are there. इसका वीडियो रिकॉर्डिंग ज्ञान स्टेशन के यूट्यूब चैनल पे है, जिसका लिंक मैंने शेयर कर दिया है. Second query is with respect to the PPT. तो PPT will be made available on the WhatsApp channel. WhatsApp channel पे आपको उसका PPT पास ऑन हो जाएगा, शेयर कर दिया जाएगा. इनफैक्ट हमारे all the webinars PPT we share openly with all our audience. And also every YouTube, the past webinars which we have done, that is also publicly available in public domain on our YouTube channel. And I now request Darshit ji to please give the formal vote of thanks. Thank you, Darshit, for joining us. And having you is great. Your volume, can you please help me with your volume?
Audible?
Yeah, a little bit more.
Okay.
Yeah.
I'm honored to deliver the vote of thanks for today's session on behalf of all the participants from the Gujarat State Tax Bar Association and other tax bar associations. I extend our heartfelt gratitude to CA Rahul Baltiji and Sandeep Jaiswalji for sharing his valuable insight and practical perspectives with such clarity and depth. Once again, thank you Rahulji and Sandeepji for a very useful and informative session.
Most welcome. Thank you very much.
Thank you so much, everyone, for joining. And thank you. Sir, you can see the comments from all our participants. And it's really heartwarming as an organization, as an organizer for the webinars, and also for the speakers. Thank you so much. And here we sign off today's webinar.
Thank you, everyone.
And
Thank you. Thank you,
the
everyone.
information for the next program will be shared on our channels, on our social media very soon. Thank you so much.
Thank you.